Hi everyone, I'm Dan, this is Kai, and we are the directors at Crescent Mortgages. Today we're bringing you another one of our FAMQs, frequently asked mortgage questions, and today's topic will be covering obtaining a mortgage if you are self-employed, specifically as a sole trader. We know that a lot of people have certain gripes and queries and think that life's a bit harder as a self-employed person to obtain a mortgage. In some ways it is and it can be, but you just need to make sure that you know what you're doing, and it is very, very possible. Before we jump into it, just to remind you that we are CMAT qualified mortgage and protection brokers with a combined 20 years in the industry. Let's jump into it. So, are you a self-employed sole trader? Some people actually don't know exactly what type of self-employment they fall into, but I mean, essentially, if you're not a partner at a partnership, if you're not a director of a limited company, which is a kind of a separate legal entity, then you are a sole trader, which I think arguably is maybe the most straightforward type of self-employment to obtain a mortgage, would you say?
Yeah.
In a way?
Yeah, it is. Yeah,
Not that much in it, I guess.
Yeah, often probably...
Danger.
Thanks, mate. Often tradespeople are quite often sole traders, I think, if I'm thinking of types of people.
Quite common.
Yeah, a lot of tradespeople, work for yourself. That's quite common sole trader.
Yeah, not always, depending on kind of the expanding business, but that's a quite common area. So I guess a couple of the key things that we want to point out. So first of all, lenders will generally be looking at an average of your last 2 years tax returns. So if you're only recently self-employed, let's say you've only got 6 months, a year, 18 months, then it is going to be really, really tricky for you to obtain a mortgage. We won't beat around the bush. Really, you're going to have to be patient, and you're going to have to kind of build up those years' accounts, because lenders don't have the assurance with a self-employed person that you have guaranteed income like an employed person. So they do want to see a track record just to make sure that there's some level of consistency. So that's the first thing. Occasionally, there's 1 or 2 scenarios where you may be able to get around it, but 99% of the time, you will need your 2 years books before we can start to look at a mortgage for you.
Yeah, exactly. And I think of those 2 years, you'd say they normally take an average.
Yeah, normally take an average of the last 2, unless your profits have dropped, in which case they're most likely just to look at the most recent year. Although bear in mind that if your profits have dropped, they will often ask why, because they want to be kind of certain that they're not going to continue dropping each year. So as long as there's an explanation for why they've dipped, that's okay. But yeah, on the whole, if it's kind of similar or it's going up, then they'll normally look at an average of the last 2 years. Yeah. Now, I think a big one, and this is kind of a common mistake that we see self-employed people make, a really common mistake, is that when a lender looks at your income to work out how much they're going to lend to you, what aren't they going to use?
Aren't they going to? They aren't going to use the headline, the turnover. They're not going to use the turnover figure, because being self-employed, you have costs of running your own business, and they will be deducted before your tax bill. So they will be using the net profit figure that will be either on your tax calculation, your SA 302, accounts if you have them sometimes. It'll be the net profit figure that they use. Yeah,
and that's important, because we have not necessarily disputes, but there are some self-employed people that they can't get their head around it, and they kind of, well, hang on, I'm taking home X amount each month. But ultimately, if you've put £10,000 of expenses on your tax return, which was maybe advised by your accountant to reduce your tax bill, fair enough, as long as they were genuine expenses. But those expenses, as far as the lender is concerned, are kind of mandatory, compulsory, required expenses to run your business. So they'll look at the profit once you've paid those expenses. So that's the first thing. If you're trying to borrow as much as possible, then racking up loads of expenses to reduce your tax bill isn't gonna benefit you. You almost can't have it both ways on that front.
What's the second one?
The second what?
You just said that was the first one. That's all.
Did I?
Yeah.
The first what?
I don't know. You said it.
I don't know.
No.
I don't know.
I think that was the main one. I didn't have a second one.
No.
Good. I think that's me.
Turnover, use the net profit, average of the last 2 years.
Yeah.
I think that's pretty straightforward, isn't it?
Yeah, it is. Yeah. The documentation you'd normally want, I think we touched on briefly. Tax calculations, SA 302.
I don't think we did touch on that one. I think that was the second
briefly.
one. Yeah. So the
accounts if you have them.
Yeah. But generally, if you're a sole trader, self-employed sole trader, they're going to be looking at your tax returns. But the actual document that they'll ask for is either called a tax calculation with supporting tax year overviews, or also known as an SA 302, or if you use an accountant, they'll be able to provide that for you, or they may use their own software and provide you with tax computations, but they're specifically what the lender's going to ask for. If you just download the actual tax return that was completed, that's not going to help you. They then need to receive the tax calculations and overviews that have been produced, confirming your final profit, how much tax you paid, etc. So they're the important documents. Any questions, contact your broker. And any questions for now, obviously give us a call, drop us a message or leave them in the comments and we will come back to you. We'll see you again next time. Thanks a lot.